If I could literally trade only one entry model for the rest of my life, it would be this one, which is the 10 a.m. 4-hour PO3. Now in this video, I'm going to be breaking down an entire trade, full top-down analysis of what exactly I look for every single day and how I find this exact setup here. This trade alone actually netted me over $16,000 on just this one trade. If you don't believe me, you can see this is kind of a funny screenshot from the TikTok live. I don't really know what I'm doing up there. But anyways, you can see just over here, 16,000 copy traded between 9 of my 250K Apex accounts. So now that you can see the real potential of this entry model, we can go ahead and dive into actually how to trade it. Now, this is a little bit different than the traditional 10 a.m. PO3. Rather than seeing a perfect textbook accumulation, manipulation, distribution, this is a sort of a combination of that and also the market maker buy model. And this was a CPI day, so it's also going to tell you how I navigate those days more safely. So without further ado, this obviously was the setup, was a 5R to these highs up here. We did have a runner from data highs. We stopped them out in profit pretty early though. So that was the setup. Let's go ahead and really just start all the way from the higher time frames here. Let's go ahead and start at, yeah, we'll start right about there. So I'm going to start on the weekly time frame here. Let's get rid of that. So clearly here, obviously the weekly is breaking to the downside, but we do have a clear low here on the NASDAQ right here at about 19K. So we have that. We have not taken it out, but we are starting to see a more of a significant bottom wick being put in. So we haven't taken that one out. But when we flip to ES, we have clearly taken that out. So step one of this is going to be an SMT divergence on the daily and the weekly time frame. So super high time frame SMT divergence. That was part number one in me finding my bias. I am looking for one high time frame PD arrays and high time frame SMTs. So part one is that done. We are bullish on that side of things. Now, hopping on to the daily here. We also see what potentially looks like a Tuesday low of week weekly profile. Okay, so weekly profile, that's what I'm looking at. Monday, we opened. Tuesday, we swept out Monday's low, and Wednesday, we are already starting to continue higher. Now, obviously, we did have a daily fair value gap, but I am going to hold more importance over the weekly SMT versus just a daily fair value gap. And we are in an extreme discount in the market in this scenario as well. So, yep, that looks right. But again, we are starting to push up. The most recent change in the state of delivery was also to the upside here. Now, if we go ahead and look at the Forex Factory here, we can see that, well, let's go back. So this was actually last week. Wednesday, CPI data release, okay? This came out very bullish for the markets. If you have watched my video on macroeconomic news, you know that a red number means that is actually good for the market. So we had a bullish CPI data release, which, by the way, if you guys do want a full, complete, just absolute top-down analysis guide of every single thing you need to look for the PO3 strategy, I actually created a PO3 Bible, okay? I spent a ton of time doing this. It's over 22 pages of just pure sauce on the PO3, and I'm going to be giving it away to all of you for completely free. So if you do want to get the PO3 Bible and absolutely master this entry model and really start to rinse prop firms with it, you can go ahead and get that PDF at the first link in my bio on this video. Now, moving on from that, obviously that first CISD was bullish and we had a bullish CPI data release. So we actually are going to zoom out here and we're going to take a look. So yes, we did end up actually having a pretty significant push down, but we do have this area of accumulation that is sort of holding us up. So overall, data release, weekly SMT, those two things are going to make me very aggressively bullish on this day. So we can kind of flip to the 5-minute here. So as we can see right here, this was our CPI data release. Now, oftentimes with CPI, we get a pretty deep cut retracement before we actually start to continue higher. Now here, 10 a.m. Eastern, we see our new 4-hour candle opens. We have already kind of stuck within this higher time frame accumulation range right here, as we can see. So it's essentially, where are we going to see that reversal? Now we are looking for high time frame PD arrays and, again, high time frame SMTs. Kind of the same way we did for bias, but just more on that mid to high time frame. So I'm looking on more the 15 to the hourly chart rather than the daily to the weekly. So 10 a.m. opens, as we can see, we consolidate a little bit longer and we eventually keep pushing to the downside. Now, this is still a pretty clear market maker sell model here, as we can see accumulation, manipulation, and some more distribution back down. So we are still in this 1-minute market maker sell model from those CPI data highs. Now, what I can see is that, okay, we have a couple of points of liquidity that have not been hit down here, okay? So these are actually going to be the London lows. So previous session lows, we're going to hold some importance over that and see if we get a reaction at or around those levels. So again, we see a push down. We actually don't quite take out that London low, but we see a reaction. So where are we going to look? We're going to flip to ES. As we can see, ES has clearly taken out those London lows and is starting to also see a reaction back up. So once we have confirmed order flow, that's going to be another SMT to confirm, okay, this is likely going to be our entry point. This is probably going to be the bottom of the 4-hour candle here, okay? Now, this is where a lot of people go wrong. Yes, in this scenario, it may have worked out if you try to bottom tick it, but a lot of people just try and bottom tick and go for crazy high risk reward. Again, there's no reason to do that, right? In this trade, I didn't bottom tick. I waited for plenty of extra confirmation, and I took away a 16K day. So point being, we want to wait for one thing on the lower time frame, which is an order flow confirmation. And no, I'm not talking about, oh, go flip to bookmap, see where the buyers and sellers are stepping in. I'm talking about PD arrays being violated on one side of the market and then new PD arrays being created and respected on the other side of the market, okay? So right now, I'm going to flip to the 5-minute and kind of look for a fair value gap. So, boom, that 5-minute fair value gap got violated, all right? And this 5-minute fair value gap also got violated. So we have two 5-minute gaps get completely violated here. So that tells me, okay, bearish PD arrays are being disrespected. Now, there's no real 5-minute gaps for us to look at. But when we flip onto the 1-minute, we can see, okay, before getting that inversion, we did respect a 1-minute gap here. And what is this starting to look like? Market maker buy model, right? This is our reaccumulation leg into a fair value gap before continuing higher. So boom, order flow has kind of been confirmed there. Before I enter, we had that other 5-minute gap. So I just wanted to make absolutely sure, because we have been bearish with all this tariff stuff, I wanted one extra reaccumulation leg. So here we can see we reaccumulate, and then we have a change in the state of delivery back to the upside, okay? And it was extremely close to inversing this higher 5-minute gap, okay? But anyways, that 1-minute CISD, we leave our stop just at that most recent low put in. Now, where am I going to target? So we have, boom, these relative equal highs right here. So that's going to be a very strong draw for me, relative equal highs. And then main target for me being the already existing high of this 4-hour candle. If we flip bullish, odds are we are going to create a new high, right? So that's my main target. That's where I'm going to trim everything. And then CPI data highs, those can be a magnet for price. So that would kind of be my TP3. Okay. Now we can see tons of confirmation. When you look at market maker model, which if you aren't familiar with yet, I've made plenty of videos on that. So this is our sell side curve. We are flipping into the buy side curve here. So boom, that's where we entered. You can see price start to run pretty aggressively right off the bat. Boom, hits those relative equal highs. And also, as you can see, soon here hits that high of the 4 hour. So that would have came out to a 5 risk to reward. To that first take profit, it would have came out to a 3.4. Okay, so risk to reward wise, this was an extremely good setup. Now, as you guys have watched me break this down fully top down, hopefully you have a pretty good idea of what I look for day to day every single time I trade. Again, if it was still a little fuzzy, or if you're just truly looking to master the PO3 and literally learn every possible way you can trade this entry model and what it looks like on different days, the PO3 Bible is completed. So that is going to be the first link in my bio. Again, it is 20 plus pages of pure sauce on exactly how you can become profitable with my PO3 strategy. So hopefully you got some really good value out of that. Go and check out the PO3 Bible while it is still up, and I will see everyone in the next video.